What's up, millennials? Today we're going to see what a fair price per share would be for SoFi, which is a fintech company that's going to be acquired by Chamath Palihapitiya SPAC IPOE. Before we start, if at any moment in this video you're like, what the hell is this guy talking about? Please check out my SPAC guide, which I released a few weeks ago. I'm going to put that in the description beneath this video. Also, if you need the Excel sheet that I'm going to be using today for this valuation, please go to our Discord. It's free to join. If you go to nesami.com/discord, you leave your name, leave your email address, you're going to get access to it. And as always, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm not a financial expert. First, let's talk very quickly about what SoFi is, more or less. So it's a fintech company, and they have a very member-centric approach, which is always good to hear, of course. They claim to have everything in one place for a higher convenience of their users. You can borrow money, you can buy stocks, you can pay bills, whatever you want. And with regards to the merger, we're not sure exactly when this is going to happen. They expected to close it in Q1 of this year, but I'm kind of thinking that's going to be postponed a little bit, maybe to next month, more or less. Then if we look at the pro forma valuation, we can see the following. As almost all the SPACs, they started out trading at $10 per share, as we can see in the investor presentation. Pro forma, they're going to have 865.1 million shares outstanding, so after the merger. And that already means we can take this number of $10 per share, multiply it by the amount of outstanding shares, and that is going to give you a pro forma equity value or a pro forma market cap of $8.651 billion, which is also the number over here in the Excel sheet. This is simply where you put the price per share. This is where you put the amount of outstanding shares after the merger, and then the Excel sheet is going to calculate everything for you. You're also going to need to put in the amount of net cash they're going to have on their balance sheet. And you can see that right over here, we can see that cash to balance sheet is going to be $1.91 billion. So that's a number you can put over here in your Excel sheet. And then you can already calculate, or the Excel sheet is already going to calculate this for you, the enterprise value, which is the value of the company SoFi itself. So the difference between the enterprise value and the market cap is the amount of net cash. So the pro forma market cap, as we just calculated, was $8.651 billion. If you take off the amount of net cash they're going to have on their balance sheet, you're going to arrive at a market cap, an enterprise value after the merger of $6.7 billion based on a share price of $10 per share. And if we go into trading view, we can see that IPOE is just selling off just like the entirety of my portfolio, probably yours as well. We can see that IPOE is currently trading at $15.21 pre-market. So that's the number you can put over here. And then the Excel sheet is going to calculate the pro forma market cap, which is right now $13.2 billion, and also the pro forma enterprise value, so $11.2 billion. So basically, based on a price per share of $15.21, IPOE, SoFi would right now be worth $11.2 billion. But we, of course, want to know a fair enterprise value instead of just the pro forma enterprise value. We're going to need two numbers for this. And by the way, if you're going to use the SPAC guide, this is going to be method number two of the SPAC guide. So we're going to need two numbers. First of all, we're going to need a revenue number and a revenue multiple. Let's start out with a revenue number. So for this valuation, we're going to be looking at the revenue of 2022, and we're going to apply a certain multiple to that revenue to arrive at a certain enterprise value. So if we take a look at the enterprise value, or if we take a look at the revenue of 2022 of SoFi, we can see that they expect to have a revenue of $1.5 billion in 2022. And of course, as I say in almost all my videos, expect is a very big word, of course. We're not sure if this is actually going to happen, but hey, this is the number we're going to use for our calculation. So that's a number you can put over here in your Excel sheet. Next to EBITDA and Rev, you can just put $1.5 billion. Then we're also going to need a multiple or a range of multiples. And the investor presentation of IPOE or SoFi doesn't provide us with a fair multiple. So we're going to use the investor presentation of MoneyLion. I also made a valuation video for this company. And we can see over here on this page in their investor presentation that they have put together a list of companies which are relatively similar to each other, and they looked at their revenue multiples. Again, if you don't really know what I'm saying, please check out my SPAC guide, which I released a few weeks ago, and that's going to be in the description. Here we can see the multiples of multiple companies like MoneyLion, Affirm, Afterpay, Square, Open Lending, Upstart, and also SoFi. By the way, SoFi was not at the price per share of $10 per share, but it was at the price per share of, I believe, around $24 when it was on February 10th, so the 10th of February. But we can see all the multiples over here. So Affirm has a multiple in 2022 of 34x, 27x for Afterpay, 20x for Square, 18x for Open Lending. Upstart has a 17x multiple, and SoFi had a 13x multiple. And then we can see that the median of these multiples, of these 2022 multiples, the dark bars, is 19x. As you can see over here, it might be a little bit small to see, but it is actually saying 19x. So then, just like for MoneyLion, we came up with a range of revenue multiples of 17x on the low end and 21x on the high end. So again, we have that median multiple of 19x, and I've decided to create a range of multiples to arrive at a low multiple, so also a low valuation in the end, and a high multiple, so also a high valuation in the end. So those are the numbers you can put over here in the Excel sheet, and then the Excel sheet is already going to calculate the rest of the numbers for you. So what it does is the following. It takes that revenue we calculated or we expected from the investor presentation of $1.5 billion in 2022, and then it's going to, first of all, multiply it by the low multiple of 17x to arrive at this enterprise value of $25.5 billion. And it's going to do the same thing with the high multiple of 21x to arrive at a high enterprise value of 31.5x. Then you can also take a look at the midpoint valuation, which is basically just the average between the low and the high valuation. And the midpoint enterprise value right now is $28.5 billion rather. So those are the fair enterprise values. And again, keep in mind, this is method number 1 of my SPAC guide. So we don't need to discount this back to the present. We can just keep these numbers as is. But these are the enterprise values. We, of course, want to know what a fair price per share is going to be. Well, first of all, to arrive at a fair price per share, we're first going to need to go back to a fair market cap. In the beginning of this video, we said that the difference between the enterprise value and the equity value, so the market cap, is the amount of net cash they're going to have on their balance sheet. And we said, well, SoFi is going to have $1.9 billion in cash on their balance sheet. So we can now take that enterprise value, add back the amount of net cash on their balance sheet, and then we're going to arrive at these fair market caps, if you will. So for the low end, that would be 27.4 billion. For the high end, 33.4 billion. Oh my God, that's a very difficult number to say. And then for the midpoint valuation, 30.4 billion. And then the only thing we now need to do is to take those market caps, divide them by the amount of outstanding shares after the merger, which we said was 865.1 million shares outstanding. And then you're going to arrive at these fair prices per share. So for the low end, that will be $31.68. For the high end, $38.62, and for the midpoint valuation, $35.12. So based on these calculations, SoFi would currently be actually undervalued. Of course, keep in mind, don't trust me, verify me. Always check what I'm doing because I could be entirely wrong. And also keep in mind, we have been taking a look at assumptions, predicted revenue numbers, a certain revenue multiple range. So if you change one of those numbers, the entire calculation is going to change and your fair price per share is going to change as well. Let me know in the comments if you will buy SoFi as well. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!